All right, guys, we are back. This is Patrick here. I do the Patrick Crypto News, so definitely keep watching this channel if you guys like seeing the news. Well, I want to talk to you guys today about the rise of institutional investors. And there's just a lot of institutional investors coming into Bitcoin right now. We're seeing a growing demand as Bitcoin is hitting the 19,000, the all-time high that it's hitting again. You know, it went down to 18,000, but it's going back. But why is this demand for institutional investment coming in? Like what's making this huge market? Well, I'm going to tell you guys right now. One of the big rises is the $600 billion demand for Bitcoin from global institutional adoption. That's really big, guys, because basically we saw this Mass Mutual, this big fund, come out with $100 million purchase for Bitcoin. Basically, the JP Morgan analysis have predicted significant demand for Bitcoin following this huge purchase. So this is like the rise of the institutional investors into Bitcoin. JP Morgan basically said on Friday, explaining why they see a significant demand for Bitcoin, that the recent investment of $100 million in the cryptocurrency by mega insurer Massachusetts Mutual Life, you can see it right there, Insurance Co., has highlighted a potential for institutional demand in cryptocurrency in the coming years. So they basically just set a precedent for Bitcoin for institutional adoption. We've been waiting for this for a while, guys, because that's what's going to push up the money a lot on Bitcoin. There's going to be a lot of wealthy investors now coming in, and families and insurances and basically pension funds. And they said right here that elaborating, one can see the potential demand that could rise over the coming years as insurance companies and pension funds follow Mass Mutual's example. They explain that traditional investors like insurance companies and pension funds can face regulatory hurdles relating to the risk and levels of liability mismatches that would limit how much they can invest in Bitcoin. So now they're doing a lot more investment. There's a lot more happening, and this is really good for all of us that are holding and basically investors in Bitcoin and holding basically XRP and all the other ones, because it's going to bump up the prices a lot more. They're saying that they believe that even the small portfolio allocation, such as 1% of this with Mass Mutual in Bitcoin, could be significant for the market. With Bitcoin outperforming most assets this year, the analyst explained that if pension funds and insurance companies in the U.S., Euro area, UK, and Japan allocate 1% of Bitcoin, that would result in additional demand for $600 billion. So this is why I tell you this, guys. It's like we've been waiting for this institutional money to come in. There's a $9 trillion deficit right now where Bitcoin should be. We should already be in the $1 trillion mark. I mean, if we look right here, you can just kind of take a look. I think we're at 560 billion. This should already be at $1 trillion. We're already at a lot of analysts already said it should be at $9 trillion. So there's just a lot of money that should be going around right now. So getting back into the articles, so you guys can kind of sum this up for you. They're saying institutional interest in Bitcoin has been rising rapidly. Recently, the CEO of Standard Chartered Banks said that widespread cryptocurrency adoption is inevitable, absolutely inevitable, while the CEO of BlackRock said Bitcoin can evolve into the global market. Ready for institutional demand, a growing number of major banks have started offering cryptocurrency services, including Stanford Chartered Bank, BVAs, and DBS. So that's really good, guys. We're waiting for this institutional adoption to occur. Here's another article that was back in, I think it was November, and I just want to show you an old article so you guys can kind of have a refresh of what was going on. Bitcoin's massive rally is different from the speculative frenzy in 2017 as more institutional investors buy in, says Mike Novogratz. Did I spell that right? Investor Mike told CNBC on Wednesday that Bitcoin's 148 surge this year is different from retail-driven speculative frenzy in 2017. He basically says the cryptocurrency reached 19,000 only to drop 78% years later. This year, Bitcoin's boom is driven by institutional buy-in as investors are looking to hedge against paper money. We know that the stimulus and all these, the dollar's going down. The stimulus is happening. There's a new round of stimulus. Everyone's going to be going online looking for crypto to save the day. So this is the savior, guys, that's coming in with the institutional money. That's why I'm doing this video right now. The Bitcoin's boom is driven by institutional buy-ins and investors looking to hedge against paper money. The investors said that they basically say it's the new digital gold. The investor of Bitcoin hit a velocity and will skyrocket to 60,000 by the end of 2021. I actually think it could go up to about 100,000, but that could definitely happen with this institutional money. The second round of stimulus might even shoot it back up too, because people are just losing faith in the dollar big time. Bitcoin investment is anxious. I can't say that right now. It's been a long day. Anxiously awaiting a crash following cryptocurrency's 148% surge. And basically, they just kind of go into it saying that they could get 60,000 by the end of 2021. You can't buy Bitcoin at Citibanks or Bank of America. Here, let me zoom in on this. As their strategists are talking about, we're seeing institutions buy into this. We're seeing high net worth families buying into this and institutional adoption occurring. They're basically saying Bitcoin hit an escape velocity as institutional investors around the globe are increasing their store of value rather than a speculative vehicle. Investors on social media see Bitcoin as a social money, while baby boomers view cryptocurrency as a macro hedge against paper money. So that's good news right there. People are going, this is in November, guys. People are going to Bitcoin because there's 20 million Bitcoins that will ever be mined. There's complete scarcity in it. People believe it's a store of value. It's a social construct. You can't change that. The investor expects Bitcoin to hit 20,000 by the end of the year in 2020. Where is it at right now, guys? This is November, 20,000. Then a pullback covered around 16,000 before it skyrockets up to 60,000. There you have it right there, guys. $60,000 Bitcoin. How are we going to get there? Here's one more article I want to show you before we end this video, because this is kind of a late night video I was doing for you guys, just to talk to you guys about institutional investment, because I think it's very good. Without a doubt, Bitcoin has become an increasingly popular asset among institutional investors. By the end of the second quarter in 2020, Fidelity reported a survey of almost 800 institutional investors that 36% own crypto assets. The survey conducted crypto assets on a crypto asset insurance company, Evertis. And they basically said that it projects a 90% institutional holders of assets to invest into more Bitcoin this coming year. So 90% will invest more. They're saying that MicroStrategy, Grayscale to JP Morgan and Goldman Sachs, Bitcoin has solidified its place in investment portfolios as the asset to hold against the hedge fund, against inflation, and the current devaluation of the dollar because of the corona pandemic especially. However, beyond that, there are real technical reasons why institutional investors are becoming more bullish on Bitcoin, with predicting it to reach 1 million by 2025. That's kind of like the Winklevoss twins and all them. While the future value of Bitcoin may continue to be a topic of debate, the reality is that investors and financial institutions now believe Bitcoin might prove to be less risky than not having Bitcoin exposure at all. In fact, according to crypto research Mizrahi, more than 81,000 Bitcoins belong to treasuries and publicly traded companies. That's pretty big news. They're saying Bitcoin's borderless network and blockchain technology. Here's just some more articles we won't get into. But that's it, guys. Institutional investment is coming, and it's going to come big. I definitely think we will see that $60,000, maybe $100,000 Bitcoin in 2021. All those predictions have been right. So, yeah, that's what I wanted to tell you. Thank you guys for watching. Stay bullish.